Good evening, everyone. This is Srikanth Rajan, and welcome back to Market Pulse, where we discuss about what happened in the market last week and what could be expected the next week. A quick summary on all things together, so that you really don't have to, keep updating yourself on a daily basis. So here we start off first by discussing what happened in the market last week. The most important thing to be looking at last week was HDFC Bank. So HDFC Bank has actually finally taken a support and has seen a good rally, and has started from, if you remember, it came to a low of around 1390, and from there has come up now almost close to 1450. So it's a big move that it has happened. So basically the bank nifty, which was underperforming all this while, has kind of tried to recover, though it's not at all time high. But one important thing was, because of this HDFC's move, Indian stock market has hit a all-time high. Absolutely. It even came to 20 to 500. So who could imagine just a few weeks back that Nifty would be hitting 20 to 500 this early? So that's the kind of up move that has been happening in the market. The markets have been rallying fantastically well. Indian stock markets are already at its all-time historical high, thanks to the big funds coming in from the mutual fund source. Yes, mutual funds have been hitting record highs every month, and that fund is being pumped into the Indian market. And this is something that we had discussed and expected at MPA family earlier, and that's something which is giving joy, because most of our investments are doing really great. Now, is this fund going to continue? If so, how long is the question that we need to answer. So I'll be answering that in the course of this video. But of course, before that, there are a few things to understand. Now, if you see most of the banks, especially if you look at ICICI and SBI, they are at their all-time high. And that is when HDFC Bank, which is the biggest private bank in India, is about 15 to 16% lower than its all-time high. And one thing we need to remember, HDFC Bank has the highest weightage in Nifty and Bank Nifty. So this one bank, if it moves up, is more than enough to take the Indian market from 20 to 500 to 23,000. Now, this is something that could be expected, because almost you name the mutual fund, almost every mutual fund will have the investment in HDFC Bank. So with investments continuing to come, one most important thing to be looking at is the FII. Now, for those who are new, FIA means foreign institutional investors. And if you see the last 1 week, in fact, on Friday, we could see the FIs have almost bought for 7,000 crores. A lot of block deals happening. We could expect, that the market has been seeing a great fund flow, but FIs have been on a on and off mode. They have sometimes come and bought, and then sometimes sold. But at this point of time, the way the markets have actually moved up, it is actually getting costlier for FIAs. And we have discussed this earlier. FIAs will get the confidence to buy more only after the elections, because they are looking for a stable government. So if the current party continues, not connecting it to any party, but I'm trying to be neutral politically here, but if a stable government is seen, that is, an existing government, if it repeats, that could be a positive. This is something that we've discussed earlier also. But any change in that could be kind of triggering a short-term confusion in the market. So that's something which could be on the cards. In fact, when the markets have been rallying up so high, that could be one thing that could be a slight deterrent from going further higher. So that's something that we need to watch out. See, one thing, let me tell you, with my experience in India as a country, election results can never be predicted. But in fact, at this point of time, almost the entire market is moving as if it is kind of confirmed that the existing government may continue. Otherwise, if you see the VIX, which is the indicator of the fear in the market, is also not rising up. So that means the entire market is actually seeing that, or expecting that the government can continue. Now, if that continues, that's really good. But if at all it doesn't, then that could lead to a big fall temporarily in the market. So that is something that I'll be watchful about. Well, at this point of time, I am not, I have got some portion of funds, including MPA family, which is outside the market, which is into good investments, which gives us fixed returns. So which can be deployed if at all we see a dip. Now, does that mean you have to take out your money out of the market? Definitely no. It all depends on one very important thing, that is, how far is your financial goal. If your financial goal is somewhere very close by, it's high time you actually booked your profit and kept it aside for that financial goal if it is within 1 year. And if your financial goal is at least a 3 to 5 years plus from here, then just continue to invest. And if at all you see a dip, that should be a time you should add more funds to generate more returns. Simple as that. Now, coming to the next important part of this week, the upcoming week. So, upcoming week is going to be a little lackluster week in India. Nothing important coming up, but then we will take cues from the global markets. If you see on Friday, US markets have actually tumbled. We had a holiday on Friday for Shivratri, and US markets were working, and we could see some profit booking kicking in. That's naturally because US markets are going into their expiry. It's called quadruple witching, day. That is next Friday. So because of that, the market would be seeing some volatile movements in the US. So that could kind of, give some disturbance to Indian market. So be wary of about it. But apart from that, if you see this week, we also have the US CPI data coming, which is on Tuesday. The expectation is that it would come around 3.1%. However, that will be closely watched because that could kind of impact the Federal Reserve decision on the interest rate cuts. Now, there are different talks happening that it can happen in March or April, but it's not going to happen in March for sure, probably. But then, this data could kind of trigger some movement in the market, so that should be something that we will be watchful about. Apart from that, we also have the producer price index coming up on Thursday in the US. So these are two important data in the US that could kind of affect Indian markets as well. So we will be watching these two data closely for next week. So that is something on the cards. Apart from that, if you see the last week of March is something that is going to be crucial because the market is going to see just a 3-day trading week. Yes. So the next week, that's the last week of March, we have Holi and Good Friday. So Monday and Friday is going to be holiday. So you only get Tuesday, Wednesday, and Thursday, just 3 days of trading days. So along with that, it is a monthly expiry as well. So both of these put together, we could see the last week of March seeing some very big volatility in the market. Along with that, we might even have that election dates coming up. So these are few things to be watched in the upcoming part of the month. Now, coming to the topic of most important thing, how long is the fund flow going to continue? Now, I am not expecting the fund flow to stop in the mutual fund sector because people are getting more and more aware, and Indian markets will continue to see more fund flows at least for 3 to 4 years is what I am expecting, because that is a minimum I'm expecting. Probably could go even higher, but then the fund flows will continue because Indian market is getting more and more aware, especially Indian population is now interested in investing into the market, and that could be kind of a great positive for Indian market. If there is a market fall, that could be a deterrent for a short term, but with people getting educated the way so many influencers and the overall public is getting educated about all these things, I feel the recovery will be very fast if at all there is a dip, and markets will continue to go higher. So this is something which could go and a long way for long-term investment. So equity exposure is something which is getting comfortable with people at this point of time. So this is here to stay is what I would say at this point of time, because in India the retail participation in the market is too less, probably less than 10% of the population. Whereas if you compare this with the Europe or the US, it is almost more than 50% of the population participating in the equity market. So India has a long way to go. So that number is not going to change soon. So of course, we're going to see a lot of funds coming in. Now coming to the next important part of the discussion, that is the tax saving part. Now, these are few things that needs to be taken care of if you are on the higher tax bracket of 30%, and if you're on the lower part of the tax bracket also, there are few things to be taken care of. That is something we will discuss now. Now, very important part, if you are a part of MPA family, do connect with us. Let us schedule a meeting and plan your taxation. Of course, if most of the MPA family members' taxation has been planned in advance, but if any of you have missed out, if you want to do that, you can always schedule a meeting with us at mpainvest.com and we can get that going. But it is time to book some profits to tax save. So save taxes. So how do you do that? Now, if you have mutual fund investments, which is having more than 1 lakh of profit, one very important thing is you should see whether the investment is more than 1 year. If the investment is more than 1 year, let me tell you, if you're talking about SIPs, the investment of that SIP should have happened 1 year back. That is, any investment which was done prior to January of 2023, if that has gone up more than 1 lakh, you can book a partial profit of 1 lakh rupees, because as per the taxation rule, you can book up to 1 lakh profit on your equity investment without any taxes every year. So on a PAN card, you can book your 1 lakh profit, and if that 1 lakh profit is taken out, immediately you can reinvest it, so that you have harvested your profit out of the market. So this can be done for your equities or your stocks, mutual funds, or your stocks holding in India. So this is something which is very important. If you need support, connect with us and we will gladly help you. So up to 1 lakh rupees profit can be booked and reinvested. That way you have kind of saved on your taxes on that. So as we go further on a long term, this would kind of slightly improve your returns. That is the first thing. Second important thing, if you are holding any stocks, and if any of the stocks are in loss, now of course chances are very less this time because the market has rallied so much. I am not sure if any of you would have some stocks with major negativity in that. But then if you have already booked some profit in your stocks, for example, let us say you had booked some profit worth 2 lakh rupees, and there are two stocks which are giving a negative of about 30,000, 40,000 or 50,000 rupees. Let's keep it 50,000 rupees. Now you have to pay the taxes on this 2 lakh profit which you have booked, right? If it is a long term holding, you have to pay 10%. If it is a short term, which is less than 1 year old, you have to pay a tax of 15% on this 2 lakhs. Now what you can do is, you can if you have these two stocks which are negative of about 50,000, you can exit that stock, and next day, even if you feel you want to have that in your portfolio, continue to have that, next day you can buy that same stock. So what happens is, you have booked a loss of 50,000, so your total profit, which was earlier 2 lakhs, now will become 1,50,000. So you have to pay tax only on 1,50,000, but the stock which you exited and re-entered the next day will continue to be in your portfolio. So you can probably postpone your tax payment on that and save some taxes on that. So this is called their loss harvesting and profit harvesting. So I hope this is clear to all of you. If you have any questions, you can put it in the comment section and I'll be answering that in the next podcast. So it is time to be done. You have to do this before 31st of March. This is for this financial year. So ensure that it is done and save some taxes there. Of course, efficient management of money is what creates long-term wealth. So this is also a part of that. So looking forward to support all of you with all these activities. If you have any requirement, support required, just come back to us and we will help you. So that's it for now. So now for this week, the markets are going to be reacting more often on the US data, and let us see how the markets react, because at this point of time, though Indian markets have been rallying up and hitting new records every day, but the strength is kind of coming down. So I'm not expecting the markets to see big rallies in the upcoming weeks for now, for next 2 weeks at least. So we might have some intraday movement up and down, but that may not lead to a big rally in the market. So of course 22,500 is a good achievement. I'm expecting the markets to kind of consolidate a little bit and have a slower movement upwards or take a break from the rally is what I'm expecting for now. Let's see how things go. And like I always say, we are not here to predict the market, but let us anticipate and take trades along. Well, our trading at MPI Invest has been doing really well, though I don't encourage trading. Trading is only for people who are passionate about markets and trading. But if you're an investor, just stay invested and make more money comfortably without even bothering about all this. And that's exactly where MPI Invest comes into picture, because we help you manage your complete investment absolutely tension free, so that you can continue with your career and grow there better, and your money grows here, managed by us. So that's it for now. This is Srikanth Rajan signing off, wishing you all a great week ahead. Goodbye. See you tomorrow with more details on the market.